Hey YouTube, welcome back to Love for Crypto. So as you can tell by the title, it was the Trump administration who popped the Bitcoin bubble in 2017 when we've seen the all-time highs of Bitcoin at $20,000, especially for myself and from Love for Crypto in general and on other various different outlets. We was claiming there was manipulation in the markets. A lot of people called it crazy and ludicrous, but we're actually seeing some truths to that actual story now. Again, if you've been a long time subscriber of this channel, we have been completely adamant and blatantly telling the people, the viewers, the long time listeners who've been supporting us that this is an entirely manipulated market. And as you can see, Crypto Wolf, I think I first seen this on his Twitter last night. I stockpiled it onto my notes so I could make a brief little description about it. But we'll go into the article itself here. Again, you know I'm not a big fan of reading, so I'm not actually going to read it as such. But what I will do is, I'll just circle a part here which we really should be paying attention to at this point, which is this. Now, Christopher, who left the US Commodity Futures Trading Commission, which obviously we all know as the CFTC, the regulators of the commodities market in the United States, at the end of his 5-year term as chairman in April, told CoinDesk in an interview, one of the untold stories of the past few years is that the CFTC, the Treasury, the SEC and the National Economic Council, director at the time, Gary Cohn, believed that the launch of Bitcoin futures would have the impact of popping the Bitcoin bubble, and it works. So a good way of illustrating this is obviously through the mania in 2017, especially from sort of the January to the December period, we had that extraordinary growth in Bitcoin. And the argument is here basically is that we've got buyers and buyers, but we've not got a professional institutional way of actually giving this price some sort of realism, is a good way of illustrating that point. Basically, they didn't have an institutional way of shorting the market. Now, it's not just the CFTC who's come, and obviously with this joint operation, we've got the SEC. We've got the National Economic Council director. The Trump administration clearly have popped the bubble. When we say the Bitcoin bubble, I just want to refer it back to the point of this. As a whole, the entire crypto market reached, just north of $800 billion US in valuation. That's nearly $1 trillion market. Now, for those who understand economically what's going on around the world, we are in dismal conditions, economic slowdown, growth is coming to a halt. We've seen rates now turning negative. Germany is a great example of negative interest rates, and they're a very large economy, probably the largest economy in the Eurozone itself. And they're having to issue negative interest rates. So when you've got this lucrative investment, i.e. Bitcoin, i.e. cryptocurrencies as a whole, you need to stop capital flight leaving the markets for what these central banks and governments around the world are doing their utmost to try and protect at such a delicate time. So I want to refer back obviously into January 2018, XRP, $3.81, when you're talking the averages from obviously the South Korean exchanges were around $4.10, and then the US exchanges maybe around, I don't know, maybe $3.10, I don't know. I think the upper medium where you could probably cash out in the Western societies was maybe around $3.20. And all we seen was FUD after FUD after FUD. And we're not just talking about CoinDesk articles here. We're talking about financial mainstream channels slaying out FUD. It's a security. Listen, again, on this channel, I have claimed one thing from the very, very start. The biggest suppression tool on XRP is its security status. Is it a security? The uncertainty surrounding, is it a security? Ladies and gentlemen, the metals markets, the forex markets, the cryptocurrency markets, the bond markets, the equity markets are all managed markets. They are manipulated markets. the central banks are intervening in ways that are just completely uncorrelated to the reality of what is actually unfolding around us. Now again, and this isn't breaking news as such, I found it absolutely fantastic, in all fairness, when I seen this article, that we've actually got somebody from the CFTC who has specifically said that their aim was to short this market. He says, look, we saw a bubble building and we thought the best way to address it was to allow the market to interact with it. Of course, there are different views on what ultimately brought Bitcoin prices back down to earth, reaching lows of 3,000 range. However, cited research by San Francisco Federal Reserve that also credits the introduction of Bitcoin futures for reining in the markets driven by optimists. Without shorts, a market has no pessimists. If you don't believe in a ridiculous price but you don't own, there's no way to express that view. If you don't have that derivative, and again I will highlight this, if you don't have that derivative, then all you have got is believers. It's a believers market. Now I can understand where they're coming from here. There's no institutional way to short down the actual price, and that is a very fair arguable point. But again, we was laughed at as a channel when we said it is suppressed. It's being suppressed. To this day, the market is controlled. Ripple may come out themselves and say they don't understand what's happening in the free market. I can tell you right now what is happening in the free market. This entire industry, cryptocurrencies, metals, your safe havens, your hard assets, are all being suppressed. At this delicate time, they cannot appear to be the lucrative investments, the lucrative safe havens. Listen, when we have sell-offs in the equity markets, and listen, I think if you've watched this channel by now, you understand the exact economic landscape that we set ourselves in today. Gold should be 5 times higher than what it should be today. Again, gold, this is a fascinating thing, not just gold with silver as well. You have derivative products, a derivative that derives its value from the hard asset. But what do we see in the world? We see the hard assets deriving the values from the derivatives. For every physical gold trade, there is 55 times more paper trades. So when you're dumping paper onto the gold market, the spot price of gold comes down. It's ludicrous, but it's a great way of controlling the markets, making sure that capital flight doesn't exist. And ladies and gentlemen, we have tried educating you this throughout the time, and it's fantastic for me personally, because honest to God, going back to November 2017, when I first stepped in to the crypto space, beforehand, I'd say around 2015, I started understanding forex markets and derivatives, and learning how to trading contracts, changing, you know, all sorts of different financial assets as a whole. And then obviously I did stumble across the cryptocurrency market, but I never knew the depth and the sheer magnitude of manipulation that occurs in every market around us. I mean, for example, the central bank of the world, the Federal Reserve, has its own trading desk. A central bank has its own trading desk. So, I mean, look, listen, they're talking about how Bitcoin was the biggest bubble since 2008. My opinion personally is, it's not a bubble. There is truth to the technology, there is truth to the solutions of what it can bring to the market, but everybody's got to be on board and everybody's got to be ready before they can release the hatch. So just moving from that there, I've got this here again, I've seen this on Zero Hedge. China just injected the most liquidity since January, and it's not enough. Now look, again, China, the most, and this is a recurring theme now, globally, not just in the US, not just in China, globally, this is a recurring thing now, where we're actually seeing the central banks having to step in for the repo markets for the overnights. Now again, this is on our Twitter if you do want to see it. I'm not really going to go into it into depth. I did want to show you the New York you know, the short-term overnight repo operations. And what it shows here, it shows submitted and what's available. And as you can see, over the past few weeks, we've had a lot more. Again, I will draw it submitted, as you can see here. And this was only what was available. So an oversubscribed requirement of liquidity. Remember when this first happened, ladies and gentlemen, this was only supposed to be a temporary thing. Now, it's gone from being in September to the first 2 weeks in October, to now running through to November, to now running indefinitely until the end of January. Not only that, the Federal Reserve are now adding 60 billion US dollars per month to its balance sheet, ongoing. In 6 months' time, ladies and gentlemen, we are going to have billions and billions, hundreds of billions added back to the Federal Reserve's balance sheet. And as you can see, last night here again, oversubscribed. And what was available? This down here. The Federal Reserve are basically indicating this is the availability of the liquidity that we can provide for you for your overnight lending. Imagine it as this, and this is a very good way of what I heard. A good analogy for those people in the street who don't really understand this to a great magnitude. Imagine the Federal Reserve now have set up their own pawn shop where commercial banks can come in overnight when they need liquidity, capital requirements that they don't have at hand, where they can pawn in their bonds and their equities, liabilities, what they can put as down payment for overnight liquidity. That's a basic understanding, for which I'd like to believe that anybody would be able to understand of what is actually happening here. Now, obviously, moving forward from that, as you can see, we're oversubscribing. It was meant to be a temporary thing, and it's just going on, and it's indefinite. Ladies and gentlemen, it is QE, but they don't want you to know it's QE. Another thing that's made me surprised and very proud, actually, is being able to call this monetary policy, the financial structure, the layout, to a T. To an actual T. If you want to go through the videos, I mean, by all means, check it for yourself, ladies and gentlemen, through the channel. You'll see the economic reports where we call in what our predictions are for the Federal Reserve. Are they going to increase rates? Are they going to reduce rates? And again, you know, back in January, December last year, there was nobody saying that 2019 would be a year of rate reductions. But we did here at Love for Crypto. And again, it's not to say that I'm some, you know, guru money management. I listen to sources, I obtain information, and I weigh it up on both sides of the coin for a fair analysis, and I make my own educated opinion, and that's when I express it to yourselves. And honestly, we have called it to a T. We said when we come up to Q4 2019, we will start seeing signs of the meltdown. Ladies and gentlemen, the signs could not be more clearer. At this point, we are seeing negative rates introduced throughout the world. And not only that, we are now seeing the Federal Reserve having to step in overnight lending to bail out banks. Because what's happened now, we're at a point of unsecurity within the commercial and retail banks. If you think about the 6 largest banks in the US, and you think about the repo markets, these are banks that are lending to each other for overnight liquidity. Again, we've seen the interest rate shoot up to 10%. Because no banks was willing to lend to each other, rates had to come up to make it more lucrative. The Federal Reserve had to step in and pump liquidity into the markets. I remember it was only a temporary operation. That's now turned permanent. That's now turned into the Federal Reserve adding 60 billion to its balance sheet every single month. Now, if you recall, we're in an economic boom, the greatest economy that the world has ever seen. But listen, ladies and gentlemen, when you sieve between the filters, the mainstream propaganda, as we've just fully gone into today there, when we do look at Bitcoin crashed from XRP Wolf, the Trump administration acted to deflate and pop the Bitcoin bubble in 2017. It doesn't surprise me, myself personally. I knew this was going on. To actually hear it from an executive person from the CFTC, well, there you go, ladies and gentlemen. There's your ultimate proof that markets are manipulated. I recall hearing something, I can't remember exactly where it was, but I remember Bragano distinctively saying that speed limits have been put in place. And I think this was obviously about the exponential growth of XRP. It has come right back down to reality. Now, of course, if you think about this as a person, and you think about the great news rolling over and over and over, and it's been consecutive for the past 2 years, the progress and evolution of the actual Ripple net, and especially with the rebranding to on-demand liquidity, we should be way, way, way further north than what the current prices indicate. And you may ask yourself, why is this the case? Well, ladies and gentlemen, look no further. It is right in front of your faces. It's blatant manipulation suppression. Now, this may not be as daunting as some think. Don't think that the markets will remain suppressed. They'll be suppressed until they're not. So the banks are on board. I mean, think about what's happening, especially with, obviously, with the MoneyGram. For example, the second world's largest money provider, you know, operating in 173 countries, 143 currencies. They've actually onboarded the on-demand liquidity solution from XRP. I believe they've got, you know, let's just call it 400, 500, 100 million. 500 million in working capital, and that is trapped worldwide. And again, you know, they can see the potential in the solution, obviously with using the digital asset XRP, that we can actually bring those hundreds of millions back into the US, with MoneyGram being a US institute. They can bring all this working capital, idle capital, that could potentially be working capital, from all these other currencies around the world, reimburse it back into the United States dollar, which is great for the US economy. You've got money coming back home to be reinvested within itself, without having the currency devaluation risks throughout the entire world. The amount of geopolitical events we've got going on around the world, especially in the Middle East, you know, it's fair to say. So, as we have been saying on this channel, ladies and gentlemen, this is not ludicrous. This is not. I have the conversation with my friends a lot of the times, and you know, oh yeah, you're gonna say it's manipulated, aren't you? Because it's not going your way. Listen, I praise the Lord for the manipulation, because I've been able to acquire it at such a lower price, at more of a fair value in regards of where the actual technology is. As you always say, listen, you will always overestimate technology in the short term, but you will vastly, greatly underestimate it in the long term. And we'd like to think that the stage is set for this, ladies and gentlemen. If you think about the US banks, I mean, just think about all the native banks around the world that are sovereign to their own nation. If they can bring back that working capital, we're talking potentially $10 trillion of US value coming back to all the economies around the world that could be used for the economic stimulus, for the stock buybacks, for investment within the economy itself. It is literally an economic tool. It's a saviour sent down from the Lord himself. And it's just basically technological evolution in the financial industry. Ripple aren't trying to change the landscape the same way that Facebook was trying to actually create their own sort of fiat asset, whereas obviously XRP, the on-demand solution, is just complementing the system itself. It's freeing up that trapped capital, that trapped potential working capital that is stood idle around the world. Listen, we're talking about the Federal Reserve bailing out, okay, bailing out the banks. In 2008, it was 850 billion. You got a factor of inflation compounding since then. You're probably looking at 1.4 trillion in value. We've got 10 trillion locked in the world that we can use. That's no Fed bailouts. That's no further diluting the money supply just to make ends meet. Now, yeah, there's a lot of debt. Obviously, I cannot speak for the debt. But what I can speak for is the potential to unlock trillions upon trillions upon trillions of dollars value around the world, for all economies around the world, for all economies that require the SWIFT banking system that was built over 50 years ago, that has outlived its prodigy. It is time for change, and this is the change that can genuinely re-stimulate the economies around the world by simply enabling and adopting these new technologies. And again, listen, the confirmation signs are there. Anybody that matters, you've seen all of the PDFs, the documentations from central banks, from hedge funds, from money providers, from corresponding banks. They're all, I'd like to believe, at the same point of imagination and thinking here at this point that we can potentially unlock trillions. And during the next downturn, I'm not going to say it's all the saviour, all the problems, but during that next downturn, those trillions will be essential to get the economy rolling again. That's all it's going to be for this one. I hope you enjoyed it, and I'll just catch you again.